Telegram messaging service has announced plans to build a decentralized crypto exchange offering users a safer way to transact following the FTX meltdown earlier this month. South America is blazing a trail into the crypto world, with Brazil passing a new crypto law regulating Bitcoin as a means of payment in the country. This follows a few major crypto milestones on the South American continent that we'll discuss in today's news. But first, hit the like button, subscribe to the channel for your daily crypto news updates. Let's get into it. Brazil approves bill regulating use of Bitcoin as payment. Brazilian lawmakers have approved a complete regulatory framework for crypto, regulating the use of Bitcoin as payment. It was voted on Tuesday evening in Brasilia, the country's capital. The new rules recognize Bitcoin as a digital representation of value that can be used as a means of payment and as an investment asset in the South American nation. The bill applies broadly to a sector which it calls virtual assets and now only needs a president's signature before it becomes a law. It does not make Bitcoin or cryptocurrency a legal tender in the country, unlike El Salvador, which had their legal tender bill last year. Home to a vibrant cryptocurrency economy, Brazil has at times seen more citizens trade coins such as Bitcoin than invest in their stock market. Now the country seeks to set the stage for that to translate to more day-to-day usage in financial transactions. So why is this a big deal? Well, let's take a global view of things. Brazil is a huge country. It's the biggest economy in South America and the 7th most populated country in the world. This is an offshoot of the legal tender law that passed in El Salvador just last year. Brazil was one of the countries that had politicians that commented on a crypto law after El Salvador did it. I think one of their politicians had laser eyes. I think we'll soon see similar action from Argentina and Paraguay and a few other South American nations who also had strong opinions about the crypto law last year. And we know that once early adopters take hold, they give confidence to the rest of the continent to follow suit. Have a think about this. Brazil is one of the founding members of the BRICS partnership, along with Russia, India, China, and South Africa. Russia has called for a blockchain-based settlement system to be used to transact globally, and Liquid Gold covered this earlier this week. India and China are both undergoing central bank digital currency pilots. South Africa, as recently as October, passed a law declaring crypto as a financial product in the country, giving their people regulatory certainty to invest. There's definitely a shift going on. I think we have a default tendency to see that the way that we will globalize and take care of the future of the world is through expanding our way of life to less developed nations like those in South America. Maybe we just see that on a technological perspective and an infrastructure perspective, but underlyingly there's a kind of ideological spreading as well, which is a little bit harmful. I'd offer a different perspective though. In order for the world to reach a kind of global consciousness, we need to be able to use a system that is agnostic to any particular nation's worldview, and that allows for a more just mix of different cultures. This isn't just idealistic thinking, it's also very practical as well. Crypto is much faster and much cheaper as a way to transact globally than traditional banking. It doesn't require the same checks and balances and gatekeeping and middlemen. Of course, that's just my opinion. I'm keen to hear what you think. Which do you think will be the next domino to fall to crypto on the South American continent? Leave a comment below. Binance acquires Japanese crypto exchange Sakura. The world's largest crypto exchange by total volume announced that it had acquired crypto exchange Sakura Exchange Bitcoin. As SEBC is already regulated by Japan's Financial Services Agency, this acquisition will allow Binance to re-enter the country. The FSA has issued 2 warnings to the behemoth crypto exchange for operating in the country without a license. The first occurred in 2018 when the financial regulator warned that Japanese residents had been able to use the exchange despite Binance operating without a license. A similar warning was again issued in 2021 in June, despite the claims from 2018 that the exchange had left the country. In September this year, the firm announced that it would be attempting re-entry into Japan by formally applying for an operating license with the FSA. So Binance is just so big now that they've brought a regulated exchange to get licensed to operate in the country. I think that's fair enough. It's a really great strategic move on their half. Here's a quote from the general manager of Binance in Japan. The Japanese market will play a key role in the future of cryptocurrency adoption. One of the world's leading economies with a highly developed tech ecosystem, it's already poised for a strong blockchain uptake. That's Takeshi Chino, the general manager of Binance in Japan. The move came as Japan has adopted more crypto and Web3 friendly policies. The country has regulated cryptocurrencies as a trading asset. In early September, Japan's financial regulator proposed tax breaks for crypto and individual stock investors. The country has even awarded several mayors with NFT rewards. So there you have it. Japan is going headfirst into crypto, and it's a no-brainer that Binance wants access to some of the pie of this market. If you like this content, hit the like button and subscribe for more daily crypto news. Telegram announces plans to build a decentralized crypto exchange following FTX failure. On his Telegram channel on Wednesday, Telegram CEO Pavel Durov announced that the company would begin building non-custodial wallets and decentralized exchanges that would allow millions of users to safely trade their crypto. This news comes following the failure of FTX crypto exchange. He says it will fix the wrongs that were caused by excessive centralization. Here's the thing, there's a clear trend in crypto that we are starting to recognize the problem of centralization risk. Maybe it's always been there since the start, but more recently we are definitely talking about it a lot. The model has a single point of failure that should not be trusted with people's wealth, where one wrong move could ruin the lives of many customers. Although the decentralization argument makes practical sense, we haven't adapted to that as a culture because we haven't been exposed to this technology for very long. Before blockchain technology, the last time we used a decentralized economy was centuries ago, before the power structures became so large. Maybe gold when it was traded. Decentralizing comes with a different kind of risk that would require individuals to take more personal responsibility over their own wealth. A choice which, if you asked anyone on the street, the vast majority of people would say, no thank you, I've never had a significant issue with the banks, I don't want to do that. Why would I want to manage that risk on my own? It's a hard choice because we tend to specialize and centralize when other people know more or are better skilled to handle a choice. So in that way, centralizing wasn't a bad thing, we just can't expect that everybody will be totally informed and skilled to handle their own finances. The idea is very scary for a lot of people. There's no easy choice here, just trade-offs and different requirements. What do you see as the future of finance? Are we headed to total decentralization and the harsh reality that comes with it? Or will we learn to trust centralized structures, but maybe in a more open and transparent way? That's all for today. I'll see you tomorrow for more daily crypto news.